Hello viewers, welcome to my channel. I'm Hasham. In this video, I'm going to explain you the problem number 12. Already 11 problems I have completed on computation of income from house property. So now in this 12th problem, we have two different houses. So I told you in the earlier videos also, every problem you are coming across one or two new points. Almost 90% provisions are same. The points are same. Only one or two new point is there you have to concentrate. So always keep a notebook beside you and note down the points whatever I am telling, because income tax is a vast subject. So many provisions you have to remember for computing income under different heads: income from salary, income from house property, then business and profession, capital gain, other sources. So many things are there, so we cannot be able to remember all at a time. Always keep a notebook, make a point of it. Now, before starting the 12th problem, I expect my viewers to have a printout of the problems which are given in the link under my description. Then take a screenshot of the complete solution of 12th problem, then I'll explain each and every point. Come on, see the 12th problem. Srimati Indra is the owner of two house properties. The SSC is Srimati Indra. She is having two house properties. From the following particulars, compute the income from house property tax liability. If income from profession is 6,09,300 and qualified saving 1 lakh. So not only we have to calculate income from house property, but also we have to find out the tax liability. She is having income from profession also. The house 1, house 2, data given, date of purchase, then municipal rental value, MRV, FRV, SRV, ARV, all the four values are given. That means both the houses are governed by Rent Control Act. That's why standard rental value is given. Then interest paid on loan taken to repair the house, it is allowed as deduction. Then municipal taxes. Municipal taxes paid was 10% for first house, 12% for second house. Unrealized rent is 30,000, 26,000. Vacancy allowance 10,000, 12,000. Outstanding rent nil and 15,000. The second house is purchased for a price of 14 lakh and the part payment is made to the vendor and interest of 30,000 is outstanding. See, in the second house, interest on loan taken to repair the house 30,000 is given, and that 30,000 is outstanding, not paid. So I told you in the previous problems also, interest is allowed as deduction even on due basis also. Even if interest is not paid, it will be allowed as deduction. That's it. So one by one we will do it. First of all, house number 1. Srimati Indra, computation of income from house property for house number 1. GAV, gross annual value, municipal taxes, and net annual value, deductions. Complete format. First of all, you have to make the format. Don't take the amounts. Amounts will take it after making the computations. Adjusted ARV. In this problem, the SSC is having unrealized rent and vacancy allowance also. So both should be deducted from the actual rent. The actual rent for 12 months is 2,40,000. Unrealized rent 30,000. Vacancy period rent is 10,000. So adjusted ARV 2 lakh. Now the house is covered under Rent Control Act. So ERV is higher of the following two: MRV, FRV. MRV 1,10,000, FRV 2,52,000. So 2,52,000 is the ERV. Then adjusted ERV is least of the following two. Actual ERV we got 2,52,000. SRV, standard rental value, 1,70,000. The least is 1,70,000. Now GAV is higher of the following two. Adjusted ERV 1,70,000 and adjusted ARV is 2 lakh. So whichever is higher, the GAV is 2 lakh rupees. Gross annual value 2 lakh. Less municipal taxes. It is given in the problem. It is 10%. So 10% of 1,10,000. Municipal taxes will be calculated on municipal rental value. So MRV 1,10,000. So 10% of 1,10,000 is 11,000. Deduct. NAV 1,89,000. 30% of NAV 56,300. Then Interest on loan taken to construct the house, repair the house, not construct the house, it is given repair the house. It is allowed as deduction. Repair the house, 40,000. So total 96,700 is the deductions. Deduct 96,700, 92,300 is the income from house property, house number 1. First house we have completed. Now I am coming to the second house, house number 2. So here you can see house number 2. Same format first of all we'll make. Now date of purchase not required. MRV is given, FRV is given, SRV, ARV. Interest paid on loan taken, municipal taxes 12%. And unrealized rent 26,000, vacancy allowance 12,000, outstanding rent is 15,000. This is the new point. Outstanding rent will be added to rent. Will be added. Vacancy period rent and unrealized rent should be deducted. So first of all, adjusted ARV is equal to actual rent received plus outstanding rent minus unrealized rent minus vacancy loss. So actual rent is 1,65,000 and outstanding rent 15,000 add, and unrealized rent 26,000 minus, vacancy loss is 12,000 minus. So 1,42,000, this is the adjusted ARV. Now the house is governed by Rent Control Act. So first of all, ERV is higher of the following two, MRV, FRV. MRV is 1,50,000, FRV is 1,40,000, higher 1,50,000, ERV. Adjusted ERV is lower of the following two, ERV or SRV, whichever is less. ERV 1,50,000, SRV 2,10,000. Lower is 1,50,000 adjusted ERV. Now GAV is higher of the following two, adjusted ERV 1,50,000 or adjusted ARV 1,42,000. Higher of these two is 1,50,000. But one provision is there, if the ARV is less on account of vacancy loss. If ARV is less due to vacancy loss, then adjusted ARV itself is the GAV. How much is the adjusted ARV? 1,42,000. Adjusted ARV is 1,42,000. But adjusted ARV is less than adjusted ERV on account of vacancy loss. So GAV is equal to adjusted ARV 1,42,000. If adjusted ARV is more, then we would have taken more. But adjusted ARV is less on account of vacancy loss, then adjusted ARV itself is the GAV. So 1,42,000 is the GAV. Municipal taxes 12% of MRV, 12% of 1,50,000, 18,000. Deduct 1,24,000 is the NAV. Now standard deduction 30% of NAV, 37,200. Interest on loan taken to repair or purchase the house. Purchase the house. It is 30,000 given. Even if it is due, it is allowed. So 67,200 is the total deduction. 1,24,000 minus 67,200. 56,800 is the income from second house. So both the houses we have income. Income from first house is 92,300 and income from second house is 56,800. Now it is asking you to calculate the tax liability also. So computation of tax liability. Income from house property, house number 1 92,300, house number 2 56,800. Already we have calculated. House number 2, here house number 1 92,300. Add up both. Then income from profession is given in the problem 6,09,300. Take the total 7,58,400 is called the gross total income, GTI. From GTI, deductions are allowed under section 80C to 80U. So many deductions are there. One of the deduction is 80C. This is for qualified savings. So in our problem, qualified savings are given. That qualified saving is eligible for deduction under section 80C. So 1 lakh rupees deduct. 6,58,400 is the total income. On this, tax liability has to be calculated. The first, non-senior citizen. First 2,50,000 basic exemption nil. So 2,50,000 rate is nil, tax is nil. Second 2,50,000. Second 2,50,000 the tax rate is 5%. So 2,50,000 5% 12,500. The third slab goes from 5 lakh 1 to 10 lakh. 5 lakh 1 to 10 lakh 20% rate. But this 5 lakh 1 to 10 lakh, our income is not going up to 10 lakh. Our income is going only 6 lakh 58,000. So we'll take the balance. We'll take the balance. Third slab will take the balance. So here 6 lakh 58,400 minus 2 lakh 50,000 minus 2 lakh 50,000. You'll get 1 lakh 58,400. 1 lakh 58,400, 20% is the rate of tax. So 31,680. Take the total. 44,180 is the tax on total income. To this we add health and education cess 4%. You'll get 1767. So tax liability is 45,947. But according to rounding off rule, the last two digits are 47. So instead of 47, we can take 50. So 45,950 is the rounded off tax liability. That's all. So this is the end of problem number 12. Few more problems are there. Those problems we'll do it in the next video, inshallah.